Good afternoon, and welcome to the session, The Business Case for Financial Literacy, from Classroom to Capital Markets. This is true. In reality, I am literally just back from my classroom. I was teaching personal finance this morning. This is a new course that started at Stanford in 2020. If you are an alum, I know you didn't have this course at your time, but now we have it. And we are very happy to say it is the third most popular elective. And one of the problems we had this term is that we don't have a large enough room, so we have 100 students on the waiting list. And so it's amazing, and we are very sorry that we are not able to let them in. So we have tried many different strategies, but of course the strategy is we need to add more classes, more section next year. So I'll be teaching this summer, and then we'll be adding more or less, we hope, maybe a class each quarter. So, and this is very much also due to the support of the alumni here at Stanford. So we are very excited about that. And of course, I'm very excited to host a panel with this amazing speaker. Here on my right, Tim Ranzetta, an alum of GSB. You can applaud. Okay. And who created Next Gen Personal Finance. This is, I think, revolutionary. We are going to see so many financial literacy in high school because, we are too late when we get them at college. Gerri Walsh, she just retired a week ago. So another round of applause, please. Because, boy, I don't know what she's going to do, right? Because president of FINRA and FINRA Investor Education Foundation, she probably FINRA itself and the Investor Foundation have done so much for financial literacy in the US. Gerri, I know we will miss you, and we'll miss you already. And finally, we have Natalya Guseva from the World Economic Forum. Another round of applause. She actually came back and forth from San Francisco to talk about the many initiatives that the World Economic Forum has done. And I have to say, also, we have now a global council on financial education at the World Economic Forum. So the leader, not just in the US, but around the world, have realized this is an important topic, which is really what we are discussing today. Financial literacy is not an education issue. It's an economic issue. It's what makes market works. It's what makes the economy work. And so it's very important, and we definitely have a business case for financial literacy. It's not a nice to have, it is a must have. So I'm going to start exactly with this question. So Tim, what's the business case for financial literacy?
Sure, thank you.
So great to have you back.
Thank you, Dr. Lusardi. Yeah, so my journey, just context real quickly, my passion for financial literacy came about 2.9 miles from here at a high school called Eastside College Prep. And I was a volunteer teacher, and I just saw the power and the hunger that students wanted. So that forged me down the path to create a nonprofit so that every student in America could get a personal finance class. So we provide teachers with curriculum, we train them, and we do advocacy work to get state legislatures to pass laws. The business case is one that every venture capitalist would love to see. So let's start with the return. Research suggests lifetime benefit of a personal finance class is about $100,000. There's 3.5 to 4 million students who graduate every year from high schools in the US. So that's about $400 billion. Think about that for a minute, $400 billion. That's over a lifetime. So then let's add up the costs. So a lot of people, you need textbooks, you need to train teachers, you need to add teachers. No, I created a nonprofit, and there's many others out there providing free high quality curriculum. They train teachers for free. And what's happened, because we know this, 11 states have already made it a graduation requirement. They just keep the existing teachers and upskill them. And the great news is many, many, many teachers raise their hand because they're learning along with the students. So the business case is clear. $400 billion in lifetime benefit, negligible costs. So, and I think that's why there's so much momentum here in this country.
Gerri.
Yeah, I would add to that the data that the FINRA Investor Education Foundation has collected, the National Financial Capability Study, shows that people who have higher levels of financial knowledge are more likely to be able to make ends meet, regardless of income. They're more likely to be managing financial products well and planning ahead for their future. And we also know from that data that people are extremely stressed, especially when the economy goes through some of the cycles that it's recently been going through. But people who have higher levels of financial knowledge are less likely to feel stressed, again, even controlling for income. And in the workplace, that's really important, especially for companies that employ lower wage workers and who might not be offering a 401k. But even if they are, those lower wage workers who are one flat tire, one tree limb going through the roof of the home that they live in, from losing their job, because if they have to deal with some of these financial crises, they're not able to come to work. And so having workplace financial wellness programs can complement the work that's now happening at the high school level. But what we see 100% in the data that we collect is that people who have been exposed to financial education, either in the classroom or in the workplace, just have better financial outcomes throughout their life.
Natalya.
Thank you. Well, I think the business case is almost made for us by Rishi Sunak and Ken Griffin, both of whom alluded to numeracy in financial education earlier on. And I will add, I think, just about three more numbers here. One, it's estimated that each individual makes 35,000 decisions a day. Some are small. Most of them have financial implications. Do you buy a coffee? How do you commute to work, et cetera? But only 1 in 3 people around the world are financially literate. Everyone in this room understands the power of compounding. So think about the compounding effects of each decision you make daily throughout your life. I don't need to be a scaremonger, but just the power of knowledge. That's on an individual level. Let's think about it at enterprise level. I know, Gerri, you mentioned a few things. It's estimated that financial stress causes employers $5 billion a week in costs in the United States. So and that financial stress comes from an inability to pay bills, health effects, et cetera. But just think of the opportunity of not having that productivity loss on enterprises. And at a societal level, financial literacy is not important just for the underprivileged. It is something that is important. I talk to, for instance, executives at private banks who work with high net worth clients, and they say that even at that level, there's reticence to talk about money, inheritance. There's a lot of inheritance that happens by spouses when another one dies who have no idea how to take the helms of what is left to them. And if you think about an aggregate, $83 trillion will change hands in the Great Wealth Transfer. That's mostly from baby boomers to Gen X and millennials. And a lot of that will actually be inherited by females. And that is a power to change how capital is allocated, risk is managed. A lot of financial decisions will be made there and will have a lot of implications on society.
I am going to stay with you, actually, Natalya, to speak more about why are global institutions, right, seeing financial literacy as a pillar of economic resilience?
Sure, I'll tackle it in a couple of ways, but one, Anna, you had mentioned the World Economic Forum thinks this is such an important issue. We created a separate group of global experts, actually chaired by Anna, and Gerri serving on this group too. And tomorrow they're heading to Washington, D.C. to meet with a group of central bankers to speak about this issue and the importance of it at the highest level of monetary policy, because they believe with research that financial literacy is actually an important pillar to the transmission of monetary policy. So when we think about it at individual level, when we think about it at business level, we're actually also thinking about it at the economic empowerment level. And we can talk about in detail like later how, if we want, monetary transmission may be helped by that, or monetary policy transmission rather. But this is like truly prioritized at that level. I would say more than just central banks. This is something, if we think about competitiveness around the world, the European Union was alluded to earlier as well as potentially lagging behind. I think Rishi Sunak commented it a bit. Financial literacy is really looked at as a pillar there to turn savers into investors, to increase the competitiveness of local markets and local economies. And so time and again, we're just seeing this as the enabler of economic prosperity.
So Tim, speaking of that, so how does educating the young contribute to this better capital market? And I want to echo that in September 2025, the European Commission, which is normally very focused on regulation, issued a new strategy for financial literacy. And the objective was exactly the development of a global capital market, of a union capital market in Europe, right? So how does that knowledge help the capital markets? And I want to push it really further, which is, should we mandate it in the school, therefore?
I prefer the word guarantee, because when you say the word mandate, that's like fingernails on a chalkboard. So the question about mandatory, we have a natural experiment happening today. There are 30 states. Oh, I ruined it. I was going to ask you how many states. There are.
Yes.
It feels like this quiet movement happening, but all of a sudden, 5 years later, we've gone from 8 states to 30 states, representing 76% of students that require, not that personal finance is taught, requires that a course is taught. Big difference between a course versus embedding it elsewhere. And so the natural experiment is there's 20 states where it doesn't happen. When you look at the numbers, who's getting it and who's not, low-income communities, not. When you look at, this is the big surprise for folks, they always assume rural schools and districts aren't getting personal finance. They're actually 3 times more likely to get it in a rural district than they are urban districts. And so that's what happens. Zip code is destiny. You either get it or you don't. And so this idea of doing it, and again, as I mentioned earlier, the costs are minimal in terms of actually implementing it. Where there's a will, as my mom used to say, where there's a will, there's a way. And now we have 11 states today that currently require it, growing to 30. And the reason it's even more critical today, where do you think students are getting their financial information? TikTok. If they don't have a foundation, how do they know what's good advice versus bad? And you only need to spend a little bit of time on TikTok to realize how many get-rich-quick schemes there are out there. To a young brain who's not trained in this, why should that be their first introduction to financial advice? So the second question regarding the capital markets, and we see this, this is a core part of a high school personal finance class. It's investing. Right? The more knowledge they have. Do we teach how to invest in individual stocks? Do we teach PE ratios? Do we teach balance sheets? No. We want to teach strategies where every student feels like, I can be an investor. Because there's never been a better time. The markets are as accessible as they've ever been, right? Commission-free trading, fractional shares. As little as $1, you can start investing. But access without education, the results are going to be mixed at best. So I think we're going to see, and we've already started to see early signs of it, right? Greater participation by young people in the markets, and that's why this makes it even more imperative.
And Gerri, because you from the regulatory side, right, are you worried about the young investor? What does the data say? And as a regulator, right, what can the regulator do? I also want to mention, yet again, because you mentioned in passing the data, but FINRA Investor Education Foundation supported and provided the data. It started to be collected in 2009. It's called the National Financial Capability Study. And from the world, it studied capability and financial literacy. It's the first data set that did so with a very, very large sample in 2009 but most importantly, it provided the data for the national strategy for financial literacy in the US. So they are the one providing the data, and it's very important because you want to be data-driven, right? So going back to the young investor, are you worried about them?
I'm both worried and extremely hopeful. And the reason I'm worried is that we saw, so the National Financial Capability Study I mentioned, it's this large-scale research, and Anna was talking about it as well. It's about 27,000 observations every 3 years. And about a third of those people identify as being what we define as investors, so people who have investments outside of a company-sponsored plan, a 401k, for example, or even outside their IRA. The idea being that if they've got a taxable investment account, they are making decisions for themselves. So about a third. So we took a deeper dive with those investors and surveyed about 3,000. And what we saw, so starting in 2015, we started gauging these investor behaviors. We've been doing the capability study since 2009. But what we've seen is that, there was this big influx, sort of an increase in underrepresented groups, women, people of color, lower income, and younger people, just overall. There was this rise up until 2021, and then there was a bit of a downfall, largely due to the current economic environment in 2023, 2024, into 2025. But we're still seeing investor participation at a higher level in 2025 than we did in 2015. And so that's where some of the hope comes. I'm worried that some of the people who left the market are exactly those 18 to 34-year-old investors, people of color, and men. Women actually increased from 2021 to 2025. And again, I'm super happy about that. But I'm worried as well because of something that Tim alluded to. It's not just TikTok, it's YouTube, it's Facebook, it's Reddit, it's everywhere. People are turning to social media and they're following online influencers, what we call finfluencers, to get their investing information. Now, again, there's some good news and there's some bad news. The bad news is that the people that tend to make investment decisions based on the information they see online, finfluencers, what have you, tend to be younger, tend to be male, tend to be people of color. They consult more sources for information than people who don't follow information. Now that could be good, could be bad. If they're researching with a lot of nebulous sites, then maybe that's not so good. But they're more likely to check out the background of a financial professional. And as someone who worked at FINRA for 20 years, we wanted people to use BrokerCheck. How many of you have heard of BrokerCheck? Oh boy, we're gonna turn this into a BrokerCheck moment. You can find out for free 24/7 whether the individual that you are trusting for investment advice or to execute your transactions is registered to do those things. You want to be working with somebody who is licensed to sell securities or to give financial advice. And not only can you see whether they're registered, if they're not, that's a huge red flag. You can see what their history is, how many firms they've worked at, whether they've had a history of disciplinary action by regulators like FINRA, like the SEC, like the California DFI. I know it stands for something, but the California Securities Commission. And it's really important to do those things. But part of the reason that I'm separately concerned about younger people is they are more likely to say that, everybody, very few investors say that they're willing to take substantial risk in order to, have gains in their portfolio. About 12% overall, and it's about 15% of the 18 to 34-year-old set. But close to 2/3 of 18 to 34-year-old investors believe that they need to take outside risk in order to achieve their financial goals. They don't want to. And that's a risk paradox that is really concerning to me, and it's most prevalent with the young. I could go on about fraud, about feeling satisfied with financial condition, but I know we have other topics we want to cover.
Yeah, no, we'll come back to that a little bit though. So of course we are in the Silicon Valley and we think there is an important role for technology. So I'm turning again to you, Natalya, to say, how is technology reshaping financial participation globally? And how can it help financial literacy in the future?
Yeah. I think it's a good segue to what both Tim and Gerri said. I think I was trying to think of the right metaphor here, and I was thinking, I don't know if you guys remember Bay Area before Uber and Lyft and how just impossible it was to get around. And like, I think Uber and Lyft didn't just sort of like add an option, they completely transformed transportation around the Bay Area and the world really. And so I kind of think technology with personal finance, it's not just adding an option to do something, it's just endogenous and fundamentally changing how we like interface and participate in the system. And this happens at every layer. It happens at sort of the access and execution layer. You can do this from sort of any application on your phone, as long as you have a phone and an internet connection. You no longer have to go to a brick and mortar place and talk to a gentleman in a tie, because it's usually a gentleman in a tie. It comes at this sort of attention education level, and what was alluded to with like the influencers and TikTok and YouTubers. It's at the interpretation and interaction level. And so what we're seeing is that, and this was alluded to earlier too, trust in sort of traditional institutions has been falling, but trust in technology has been rising, kind of almost at the cost of that. So when we also run some surveys, which we'll talk about in a bit more detail, we see that AI chatbots, AI advice, robo-advisors, like the preference to use those is rising almost at the cost of traditional financial advisors. And so you're seeing these preferences be made. And traditional financial institutions are lagging in communicating with their customers, in marketing products and services. And I'll use the example of crypto to sort of like illustrate what's happening. I'm not giving financial advice. I'm not expressing, personal views. I just did something bad with my microphone, sorry. I just think that it's so visible. And I also, ETFs don't have celebrity role models. They don't have Tom Brady and Giselle like telling you like what mutual fund to buy. Crypto is visible, crypto is familiar, crypto is accessible. And so that gets engagement, that gets interest, that gets awareness. And when we poll investors and non-investors around the world, and we actually ask like, hey, if you're not invested in this asset, why aren't you invested in it? They actually say that crypto is easier to access than stocks, bonds, and ETFs. They find it easier to understand than stocks, bonds, and ETFs. And so this is not financial advice, once again, I want to underline that, but perception drives behavior, and perception of understanding drives behavior, whether or not the academic literature or sort of facts may show something else. And so I think technology can be a source of some of these risks and some of these risky perceptions, but it's also an opportunity to engage young investors, to meet them where they are, to really elevate the visibility of what's out there, to make things familiar and accessible, because that's what technology can do quickly and at scale.
Can I just put an exclamation
I
point?
wanted to say, you can add, Tim, I have a question for you, but please do add, because my bet is that the high school student.
Yeah, so two years ago, we started to hear from high school teachers, you need to create a lesson on gambling, online sports gambling. So there's 40 states that currently allow it. There's only 30 that require personal finance education. And so this blurring of the line, I saw a survey somewhere which was really disturbing, and we need to do more about it. 25% of young people think gambling is a form of investing. And now we have prediction markets, right? So you can get, if you have a brokerage account, I guess, with certain brokers, you're blending, the line between investing and gambling is being distorted. I mean, it's gone. And so that's an area that we're really, teachers are telling us this has happened. 2 years ago, we were hearing this. And so I think that's where it gets really dangerous, because that first investment you make, and again, you might think a prediction market is an investment, I heard an incredible stat. with online gambling, 5% of folks get their money out. So in other words, everybody goes to zero. 95% go to zero. That's not investing, right? And so that's something we're working hard as curriculum providers to make clear to young people.
So just also wanted to tell you that we are so worried at IFDM, the Initiative for Financial Decision Making, about sport betting, that in a week, actually at this time in the morning, we are going to hold a closed-door discussion, bringing academic, policymaker, the financial industry to exactly discuss sport betting. And also it's going to be important for us and understand how can we teach this, because our students are doing it, right? And young men in particular are doing it disproportionately. And we will also have a group from the military, because that's where young men are as well. So I will hope to also provide some of the finding from that discussion. But continuing on that, Tim, I would like, we need universal access to education, right, as much as possible. And what are the barriers to that, right? We need, access, we need discussion. And what are the economic consequences of leaving that access out, right, or not having this capacity to have financial education?
Yes, I think one of the most powerful forces, frankly in finance too, is inertia. We call it the status quo bias. Things are kind of good the way they are. So I think that's kind of number one in terms of, the good news overall is the hurdles are coming down. We've gone from 8 to 30 states, and there's 5 states right now with active bills on it. So number one is inertia. Number two is the education system in this country is local control based, right? Let's let nobody tell us how to teach our kids, especially the state. Like, that's what school boards are supposed to do, and we're supposed to entrust teachers. But then you look at the data, we've polled probably in more than a dozen states, and we asked the question, do you think personal finance should be required? And it's an 80 to 85% issue. So you take that, like, okay, in many states it's less than 10% of, because sometimes there are activists at the local level, but less than 10% getting it, but 85% wish they could get it. So we made the decision, if we really wanted to create systemic change, we had to create a separate organization, a 501c4, and we did what companies do. We lobby state legislatures. And so the good news is, again, we've done advocacy campaigns in about 30 states. 20 of them have passed laws, which you talk to most people, they're like, really? But yes, this is such, and one of the other reasons I think is it's nonpartisan. Right? In an incredibly polarized world. People might like it for different reasons, but everybody believes it. We did a focus group because we were going forward with a ballot initiative in California, which we ended up not having to do because the legislature passed a bill. But the pollster said he had never done, there were 23 folks in the, the one where you sit behind the glass and you watch people talk about money. He said he'd never seen 23 people agree on it. And I'll tell you, the strongest emotion in that room, what do you think it was? It was based on personal experience. It was regret. Mm-hmm. That is a really powerful force. It's regret, and then there's a little bit of hope. Okay, not me, but maybe my children. And so I think we're going to continue to see this. In terms of, what's the economic cost? I mentioned it earlier. It's $100,000 a kid. It's 100, and I think that number is, a lot of that number is based on improved credit scores. If you consider, okay, how much do you save in borrowing costs by having a higher credit score? I think we're seeing more and more young people. We've done several documentaries, and we visit classrooms across the country, and you hear high school kids talk about Roth IRAs. Yeah. And I visited classrooms in Rhinelander, Wisconsin, and El Segundo, California, and they have a chart in the classroom. As students sign up for Roth IRAs, their name goes up on the board. It can happen. I know we all think the retention span is limited, but it is happening. I mean, that's the bottom line because of these phenomenal educators.
That's amazing. Because, we are doing the business case, I want to come back, Gerri, to think about what are the economic consequences, right? Where do you see the biggest link between financial literacy capability and market outcomes? And I know you have done a lot about fraud, so this is the time potentially to talk about fraud and also under participation and so on. And can we have again yet a sense of the cost to the economy? I want to repeat it: financial literacy is not a nice to have; it's a must have. It's really going to cost us.
Yeah, and fraud literacy, sort of fraud detection literacy is really, really important. And so, the whole mission of the FINRA Investor Education Foundation, which I had the privilege to be a leader of, is to help people build the financial stability in order to be able to participate in our capital markets. And until the democratization of the markets in the past 10 years, with all the things that we talked about earlier, commission-free trading, low balances, partial shares, et cetera, we didn't have as many people from lower income communities. We didn't have as many younger investors as we do now. So we're really at a great opportune time for those newer, younger investors. And we want to the extent regulators can, make the experience as fraud-free, as safe as possible. Regulators aim to do that. That's why the SEC, FINRA share a mission of investor protection and market integrity. But the cost is alarming, especially when you consider that all the tools that are available for investors are equally available and available earlier, as we heard from Rishi Sunak, to the fraudsters. And they don't go to their trust department to check out whether they should be doing something. Instead, they steal. And we added a new question in the financial capability study this past round that looked at whether investors, so not just general financial consumers, although we did some additional research in that space, but people who are investing, could they spot the red flags of fraud? And we used a question that was developed by our colleagues at the Securities and Exchange Commission. 50% of investors could not identify that a scenario, which I'll share with you, had red flags of fraud. The scenario is, would you invest in an opportunity that guaranteed I think it was a 25% return over 5 years with no risk? How many red flags of fraud were in that statement, people? Come on. I mean, it was crazy. 50%. And when you look at that 18 to 34-year-old set, it was close to 67%. People who had more experience, so people who had been investing for, say, 3 to 10 years or 10 or more years, much less likely to say that they would invest in that opportunity. People who are older, over 55 plus, much less likely to say that. But regardless of income, regardless of education, newer investors were incredibly likely to say that that sounded like a really good deal. And that has a massive impact on the economy. We see it in the elder fraud space in particular, but we're now expanding at FINRA to include younger people in some of the fraud protection mechanisms that have been implemented. But we would see with these, relationship, romance, investment schemes, people draining their investment accounts. And typically doing so by, the fraudsters got pretty savvy, so they would say, hey, just, send about $5,000, $7,999, under the limit, the disclosure limit for suspicious transactions to a bank, and then that money would be drained away. And so FINRA has no control over the banks, but does over the broker-dealers, and implemented a rule that broker-dealers are required to ask their customers for a trusted contact. We're now changing that to emergency contact on the account, so that if they suspect fraud, they actually can talk to someone to say, hey, is Gerri okay? They don't have access to the account, but they can get that sort of second person to sort of surround sound them to say, hey, this might be a problem. That new friend of yours, that new boyfriend, lover, your fiance might not be real. And that money, once gone, it's typically going overseas. We don't have jurisdiction. The SEC doesn't have jurisdiction. You know, the Department of Justice and the FBI have been doing a terrific job of trying to shut those down, those transactions, before they go overseas. But given technology, those kinds of wire transfers are instantaneous. And that's money that's lost and gone. The Federal Trade Commission has wonderful statistics if any of you are interested in fraud. You can slice and dice it by types of fraud, including investment fraud. You can slice and dice it by demographics. But what we see is that fraud is escalating, and it is draining billions and billions of dollars from our economy. And that's the tip of the spear, because those are the frauds that are reported. And there's such an underreporting of fraud.
I am going to end, because we want to take questions from the audience, and I'm so excited to see many of you here. But I'm going to end almost with two questions, right? So first of all, we see this tendency toward a decrease in the age, right, in which people are investing, and also we see the rise now of investing early in life, right? 529, Trump accounts, right? So we are going to have wealth when people are born and so on, right? And that, I think, speaks again of the importance of financial literacy early in life. So I would like each of you to have a closing line, starting with you, Natalya. And I know you did also a big survey on the young investor, but, you know, what can we say about that? And also, you know, what is your closing kind of line on here? And I would like also each of you to say, what can we do? Because I actually think there is a role to play for everybody, and my recommendation is for all of you to become ambassador of financial literacy. By the way, we all benefit from that. The economy benefit, and you will get your children out of your basement. So there is a win-win for everybody. Natalya.
Thank you. So I'll close by giving you a little bit of background on what we've done. Starting 2022, we've surveyed individual preferences and behaviors of investors and non-investors in global markets. And I think there's a lot of optimism despite what we've said. I think 70% of Gen Z are confident in meeting their financial goals. They're starting not just to invest early, they're starting to learn to invest even earlier. 30% of Gen Z said they started before entering the workforce, I believe. That's twice as many as millennials. So they're keen to learn. This is the education part. If we get the learning part right, I think we can get to the outcomes. And a lot of their financial goals, while I completely agree that the line between gaming, gambling, and investing has become blurry, many of their financial goals when polled are actually medium to long term and not speculative in nature, which also gives me optimism. And so I will say this. So one, these two things keep me optimistic. And in terms of like, what can we do? And my closing thought is, I would love all of us to sort of destigmatize the conversation around money. When I Googled what are the most uncomfortable topics at the dinner table, money comes up first, then politics, and then some other stuff. But like, why don't we talk about it? It's something we all need. It's something we transact with. So I think everyone in this room can do this. And if you're in a position that you're employing or an employer or potentially investing, think about also what you can do for those constituents kind of in your orbit. Because think of the costs and opportunities with all of the numbers that were said in the last 40 minutes or so.
Thank you. Tim.
So I think, the power, I'll just kind of sum up what I've seen in the 12 years I've been involved here. I came in thinking this was all about the students. And then one of my early students sent an email to me the evening of our investing class and said, my dad wants to start investing for retirement. There's a very real ripple effect here. And then there's a third, which is the teachers. So we've trained 20,000 teachers who've spent on average 30 hours in our lessons. It makes them better teachers, and it helps them in their own financial lives. So in terms of what this group can do, if you're in California, there's about a 5-year implementation period before this course gets required. If you have a children or a grandchild in a local school, tell them to start earlier. Tell them to roll out a personal finance course. Make the commitment, because it often is the squeaky wheel that gets the grease. That's a great opportunity. And just, from a community, and if you're in a state, one of the 20 states that doesn't require it, talk to your representative and say, what's holding you back here? Why are we going to disadvantage people living in our state when 76% of America is getting it?
Gerri.
I want to bold, underscore, and italicize everything that Natalya and Tim just said. And just to offer a few glimmers of hope, that whole financial knowledge, it's been low, it's been declining, it's actually leveling out. And among women, 18 to 34, the gap is almost closing. So financial education does work. We absolutely see it. And, while it's been a couple of years since we did a Gen Z study, we found that unlike their millennial forebears who are most likely to start investing because they were exposed to it through their 401k, Gen Z was most likely to start investing in a taxable account because they had purchased cryptocurrency. So not all the things that are high risk and a little bit frightening for us all lead to bad financial outcomes. It can lead to increased participation in the markets. But the thing that I am going to say to all of you, even the folks who are students and soon to graduate, look, I was there, I had a mountain of debt, so I get it. But at some point in your life, you can fund this, you can help, you can contribute. If you are one of those entrepreneurs, if you have a workplace that you are a leader of, make sure that your company offers financial wellness as a benefit. If you have whether it's a faith community, it's your children's school, it's your niece or nephew's schools, participate there, talk about money there. I'm talking about money with you now because that's what the field needs. They need money to be able to do the rigorous research that Anna's been doing. They need money to bring the programs that Tim is bringing. They need money to help globally like Natalya's doing. We need money. And so consider opening your hearts, your minds, and your wallets.
Okay, that's a great way to end, but I want to end, this is there is going to be a return to investment here, right? Also to economy and to society. I want to give you a statistic that we are going to release in May, so in a few weeks. We asked people the number of hours they spent dealing with personal finance issues and problems, and how many of these hours are at work, okay? So people spend on average, they told us, so maybe it's an underestimate, they spend on average 6 hours per week at work dealing with personal finance issues. Right? It's a win-win. I actually think that financial education programs are investment, but for the firm, right? These people are going to spend the time dealing with their personal finance issues anyway, right? And us as well, right? We are going to deal with young people who are going to potentially waste their money in sport betting or in cryptos, right? And again, we need to equip the young people in particular to be able to be great contributors to the economy, right? So the economy can grow. So it's really a return on investment. So we have a few minutes for questions, and we are delighted that you are here. I have an amazing panel, so please ask your questions. Oh my God, there are like so many, but I know Kimati is here and I know you had a question, so please, let's do it, and please wait for the microphone. And then I know I almost couldn't see like the many, so let's be brief and also brief in the answer because we have so many. But we are going to stay here forever, so maybe we'll, or at least beyond the time. I'm sure I cannot, but maybe we can just catch 5 more minutes. Okay, Timothy.
Thank you. I'm so glad you talked about prediction markets, especially as it relates to gaming, gambling, sports betting. But could you speak for a moment about meme stocks? Because you're investing in stocks. It's in the capital markets. These are all regulated, et cetera. But they have a different flavor to them. So how are you handling the education of meme stocks? Because that in and of itself is a blurring between investing and speculating.
Maybe I have one person answer, otherwise it might just be tricky, so either Tim or Gerri.
Yeah, so I'll tell you the way we teach it. If you tell them you should not do it, they will do it. So I think it's thinking about investing along a spectrum, right? And so on the far right is the speculative, incredibly risky. If you want to do it, just realize there's not an insignificant chance it's a 0 or 100 outcome. And then you kind of have. So I think you have to work the spectrum, but you can't say don't do this, right? Because we know how kids react to that. So I think you have to kind of help them understand the risk return in a way that a high school student can understand. So using analogies, I'm sure, would be better than what I'm going to come up with right now. But it's that conversation. That's a choice. You can make that choice, but just understand the volatility. You can't use a word like volatility, but the outcomes are a lot wider.
I know there was a hand go up here. Can you bring the microphone? Yeah, wonderful. I know we'll have the hands go up again, so I will see.
Current student at the GSB, I think, this is one of my passions. How do you educate people about financial literacy as somebody that grew up without that? To think about how you make that change in society, have you analyzed what you think was lacking maybe 10, 15 years ago that prevented that from being a mainstream education topic? What is changing?
Yeah, I'm going to have Gerri answer that.
Yeah, so part of it is the mandates, and Tim addressed that. We worked with Carly Urban of Montana State University, who did a wonderful study in 2015, taking a look at the impact of the mandates. And what we learned is that rigorous state mandates do make a difference. So part of it is the societal support. Going back even 10 years before that, the U.S. created the Financial Literacy and Education Commission, where heads of federal agencies that had anything to do with money, so the finance, the mortgage entities, the commodity futures, all these different agencies come together under the umbrella of the Treasury and eventually the Consumer Financial Protection Bureau to focus on a national strategy. And prior to 2005, the United States did not have a national strategy. Now, the OECD, the Organization of Economic Cooperation and Development, I believe in the early 2000s started looking at the need for national strategies and for financial education. Part of it was that, there was financial education that was happening before, but it was elective. It was often in home economics. It wasn't necessarily where people were going to consume it broadly and inclusively. And so those factors have changed: the mandates, the focus, and the inclusivity.
Over here.
Yes, you asked us to ambassador financial wellness into our respective organizations. I was wondering if you could share whose bite-sized training appropriate for the workplace that you trust.
Gerri and Natalya, do you want to take that as well?
I feel like I'll be biased, but there's a CEO of a company that also serves on the Financial Education Council, and she runs a company called Addition Wealth, and they work a lot with employers and also do white label products for financial institutions. I think they're just a good place to start for resources, not necessarily to collaborate with. Addition Wealth. But more than that, actually, the Financial Education Council has created a resource hub that's on the World Economic Forum's website, where you can actually go and see different case studies from around the world of where interventions have helped and how in different settings. Maybe I'll suggest those two, but please chime in as well.
The addition that I would add is a lot of local United Ways have workplace wellness initiatives. And so working in the community, especially again with lower income populations, they have resource coordinators that can help people, again, get access to the supports that are available to them that the employee might not know about, that can help them build that financial stability.
And we are also building a lot of resources at the Initiative for Financial Decision Making, We just finished a continuing studies course, which was devoted to the adult population. We have done a list of short videos. We have financial calculator. We have a financial literacy checkup, and so on. And we will be adding more and more resources there as well. So please also use that website. Okay, more questions.
Yes, thank you. I have two questions that are somewhat related. So Tim, piggybacking off of your the student's experience with the parent, does your organization offer opportunities to educate, for parents to get education? And then kind of related to that, for lower income students and students of color who might achieve this financial literacy and kind of have some success, I think there are pressures, there can be pressures from family members who haven't had this opportunity for financial literacy to support. So do you offer kind of tools for them to how to navigate that?
Yeah, I'll start with the second question first, which is absolutely, like, part of our curriculum is exactly around those family conversations to prepare young people for that. There's also the issue of lower income students going to college, and suddenly that simple, hey, let's go out on Friday for a meal. I remember when I was in school, I didn't have, and so you're balancing the social. So let's put the elephant out on the table and talk about those sorts of issues. So that's part of that conversation. That's why when people say, can't kids just get this online? You can't. And I think the great personal finance teachers we see, they develop the trust with the young people so they can talk about it. The first question around parents. So we create parent newsletters. So a teacher can send home to the parent, this is what your child is learning in school. And so many of them get feedback back from the parents saying thank you. And then the other thing I've heard that's really successful is let's have the students at the end as kind of a project. Let's take over the cafeteria and have the students put a poster board together, and the parents want to go see what Johnny and Jane are learning in school, and that's another education point. There's no shame. It's just I want to go see what my child's up to, and they're getting those sorts of lessons. We also do, in fact, I think we have one the next week or two, we bring teachers together who have figured out ways to engage parents beyond that. Because I think it's a difficult thing to do, to tell parents you are going to run a financial literacy workshop for them after school or at night, or they may not be available to do that. They may not feel comfortable talking about their individual issues. So what we find is teachers are doing innovative things, and so we like to share out with our community what they're doing.
One more question here. If there is a microphone, is coming. And then I see another question there, so please.
Thanks. When you were talking about how younger people are very susceptible to this get-rich-quick schemes that are out there, the explanation that I've heard is that a lot of them are having issues with the way things are going, like they cannot see the way for them to get to a place that they can come out of their parents' basement and start a new job, start a family, buy a home. So this is out of desperation. It's almost like a Hail Mary pass, trying to see if they can get there. So is there a way we could work on the mindset that even though it may be hard for you to get to where you want to be, but if you try and do this get-rich-quick schemes, you're actually more vulnerable to frauds and
Yeah. So there is a reason why there is a quick rich, right? And so on. Maybe, Gerri, I'll leave this to you, given
Sure, yeah. We've done a lot of research into the psychology of money and into the sort of the emotional state that people get into. And we do see that people make suboptimal financial decisions when they're in a heightened emotional state, either excitement, like, hey, I've got this opportunity, or fear, where they're just afraid and they feel like they're desperate and need to get money. And slowing down the conversation, slowing down those emotions is one of the things that's so key. But that's where really having an all of society focus on grounding people in sound financial concepts, not so much should I invest in a stock, a bond, an ETF, or a cryptocurrency, but What does diversification look like? What does it mean to take a long-term view? And we also know that the way we talk to people who are in those circumstances can cause them to double down with the suboptimal decision that they're making, or potentially free them. So we have to make sure that we avoid the kind of victim blaming that can happen. And again, if your peers and family members kind of have that grounding, then if you're that person in the basement desperate, hopefully there'll be people around you who will be able to come in and help. But it's an incredibly tricky psychological challenge, and that's why the field has been not only economists, but also psychologists, and a range of professionals are studying the issue.
That's the first unit in our curriculum, is behavioral psychology.
Yeah.
Because there are mindsets every student, we call it personal finance, the first word is personal, right? So we have to get those out on the table early to figure out what are students bringing.
Natalya, one final.
Yeah, and I was just going to add to this where, because especially young people rely so much on networks that are around them, whether it's social and via social media, et cetera, that's why it's all the more important to talk about money, because in the absence of conversations, you kind of lean on other things that are accessible. There's one study I've read recently on actually what a role an AI chatbot can do in actually lowering down this emotion and talking through this and slowing down the decision making. It may not be conclusive, but once again, it's about engaging, being accessible, meeting people where they are, and so there's potential there too.
I know we are up with time, and so I would love to ask if you can stay to come and ask us questions and so on. And I want to end with two comments. So I actually was very lucky to chair the Financial Education Committee in Italy, which was in charge of designing a national strategy for financial literacy in Italy. So my office was at the Ministry of Finance, and please give me credit to work with the Italian government, because believe me, it's not easy. And in 6 years, we had 6 governments. Okay, so it was at that time, but in 6 years, we were able to promote and pass a law eventually that actually mandated financial literacy in school in Italy, starting from elementary education. So this is to say, it's not impossible to do so, and I think we should start as early as possible. So I went home that one evening, and so my mom asked me what I was doing, and I told her, today I work for you. And we are working to make financial education in the high school. And my mom, being a practical person, she replied to say, it was about time. Here you go. The other thing I wanted to tell you is as an academic, I've been in academia for 33 years. And so I taught a lot of courses from macro to micro, econometrics, monetary policy, and so on. But it's only when I started teaching personal finance that I got all of this thank you note from the student years later. And one really stuck to me, because this person went on to describe to me, all of the things she had done, that she paid off her student loan, that she actually started contributing to her retirement account, and that she was about to buy her house, and so on. But she ended with saying, this course changed my life. And this is what I'd like to leave you as a message, as the return to education. We are changing the life of students, starting from elementary to high school to college. About 25% of the students at Stanford are first generations. They are always in our office, particularly Michael Boskin office, because he's so charming and he loves to tell stories and so on. But they tell him, Professor Boskin, Professor Lusardi, I have become the financial advisor of my parents. And I cannot tell you how proud I am. We never learn about stocks and bonds and so on. We are able to change the trajectory of young people, and that's a very high return to education. Please join me in thanking our panel.